Hey everybody, Gary with Basecamp Trading. Take a look at a couple trades we had in crude oil today. This is our 30-minute chart. Came in this morning and you can see crude was bullish. We were making higher highs, higher lows, 50 above the 200, 5 above the 13, and crude was pushing higher. The U.S. session was actually right in here. You can see we had triggered a 30-minute bull flag. And again, our bias in crude was bullish. We actually took our trades off the 2-minute chart today. You can see that on the 2-minute chart, we had kind of a little channel right here. We were consolidating. This was the crude pit open at 8 o'clock, or the old ghost pit open at 8 o'clock. And you see we kind of pushed down, put in this bottoming tail, and then just continued to head higher, getting us in confluence with the 30-minute chart again, which was already bullish. And then we kind of pushed up and then hit right in here, pulled back, and then started chopping sideways. So right in here, we drew our channel lines in. We had our significant pivot low down here, our significant pivot high right there at the time. And we started to push up, and we were just waiting for a channel break. Had a little poke out right there, but you see the bar did not close outside of the channel. Did set up a bull flag. Isn't a very good bull flag. We don't want to take flags while in compression. Now, if the trigger bar had triggered outside of compression and closed up here, well, then we would be interested. But again, we don't want to take flags while they're in compression. And as you can see, we just kind of chop sideways, chop sideways, chop sideways. And then we did get a really bullish bar on a breakout. We broke out of compression with a bar, left a little bottoming tail, opened right there, closed all the way up here and outside of compression. You can see that momentum was confirming that. Momentum was sideways while we were in compression. And then right here was where the breakout took place, and momentum was strong to the upside right there. So we enter at the top of this bar, which happened to be 33.94 actually was the fill. Our initial target was up here at 33.29. And we tagged that no problem. At this time, we had not hit significantly overvalued on the 30-minute chart yet, and we set up this bull flag right here. So this bar right here is actually a little bit of a bearish bar, kind of left a topping tail right there. So a little bit of a bearish bar, but that triggered our target, so we were able to hit our target on that initial push to the upside. So that was good for a little over $300 per contract. We immediately set up this bull flag, left this bottoming tail. The whole body of this bar was buying, left a tiny topping tail, but a nice strong bullish bar, setting up another bull flag. The next bar triggers it. Our secondary target was up here at 33.66. Our entry was at the top of this bar, which was 33.32. Pulled up here. Now at this target level, we were significantly overvalued on the 30-minute chart and starting to form some bearish divergence and weakening momentum. You can see that momentum was dropping even though price was pushing higher. We were at our second target, significantly overvalued on the 30-minute chart. Weakening momentum, good place to get out. Again, another $200 per contract. So at least $300 per contract on the first entry, at least $200 per contract on the second entry. And so not a bad conversion. Again, we were bullish on the 30-minute chart. We drilled down to our 2-minute chart. This was right out of our class from last week. We talked about how the smaller time frames, when we're in compression, we're looking for the breakout. We're looking for a strong bullish breakout. In this particular case, if we're to the downside, we want a strong bearish bar, but we don't want it to just poke above the channel. We want it to be a strong bearish bar that closes out of compression. This bar closed out of compression on a 2-minute chart, gave us our entry, and off we went to the upside. So all in all, some nice setups out of our class from last week trading crude oil.